I'm Jamie Storrow, and I co-head the infrastructure investment team at Northleaf Capital. Northleaf is a global private markets firm that specializes in mid-market investing. So what constitutes a specialized manager? Well, one thing to note is that the private infrastructure investment market is still a relatively young industry, particularly when you compare it to private equity. And in the industry's early years, most of the funds were relatively broad-based, with perhaps a geographic focus separating most managers. And I would call most of these funds and managers generalists. As the industry has matured, we're seeing specialization of managers in a number of ways. Managers are specializing by geography, by risk appetite, subsector, stage of development, and by investment size, amongst other characteristics. And for example, a specialist manager in the current market might focus solely on communications infrastructure in the US. They might focus on greenfield investing in emerging markets, or they might invest in very low risk assets below a certain size. These are all specializations that we're seeing, and across a number of criteria and in industry, as the industry matures, we should expect to see an increasing amount of specialization as well. Specialist managers gain traction by demonstrating a unique value proposition, and that proposition varies by manager, of course. Many investors prefer to build portfolios with very defined and tailored exposures. Specialist managers are often able to demonstrate a level of expertise in their areas of focus that is greater than what a generalist fund can offer. For example, a specialist manager might only focus on one sector in one jurisdiction, and they should really be able to demonstrate a unique proposition in that case. And we often see specialist managers marketing their products as a complement to a generalist manager, as opposed to a competing product. What do investors want from specialized funds? Certain investors want the ability to customize their portfolios. A common investment path is to start with a generalist fund or funds, and then to tailor your portfolio with a series of specialized funds. Another approach is for investors to select specialized funds according to a particular sector, currency, jurisdiction, risk, or size preference that an investor has. For example, an investor might prefer renewable power for ESG reasons, and that preference could require the investor to seek out a specialist fund. Another preference we often find is that certain investors begin investing closer to their home market for currency, relationship, or knowledge reasons, and that can result in the selection of a specialist manager as well. Most investors begin investing in generalist funds prior to moving to specialized funds, and this can result in very much a more targeted fundraising exercise required by specialist managers. This is even more pronounced for a first-time specialist fund, and those can be very hard to broadly market. Specialist funds often have to seek out an angle of some sort in the investment community. For example, does the fund's jurisdiction of focus match well with certain investors? Does the fund's return target have a particular home? Does the fund's sector approach resonate with certain groups? The more specific the strategy, the more targeted the fundraising exercise has to be. Private infrastructure is a young market, and we expect to see a growing number of funds that are increasingly differentiated. The investor community continues to seek out and reward innovative approaches to infrastructure investing.